But first, let's start with the daily chart of the broader Dow Jones Industrial Average, because Fitz likes what he's seeing right here. Right now, the Dow is breaking out from what is known as a symmetrical triangle pattern that started when the index peaked back in July. Since then, it's been making a series of lower highs and higher lows, and this is called a classic continuation pattern, meaning that the Dow is merely resting before resuming its long march higher. Resting, taking a nap, ZZZ, okay? Most securities tend to move in phases. You get a monster rally, followed by a consolidation phase. Traders take profits. Sooner or later, the supply of stock for sale is exhausted, and now demand results in another leg higher, meaning there's not enough overhead stock, so they come in, they buy, and that's how a stock moves up. Now, we're an index. And that's what the Dow's doing right now. Hey, when you get this kind of breakout, Fitzpatrick says you want to buy as early in the process as possible. What makes him so confident? For one thing, there's the volume. The Dow tends to break out, it tends to decline on weak volume and rally on strong volume. And that's a sign of increased buying activity. Plus, when you measure the July peak to the August lows, the Dow's recent range is 1,900 points. Okay, so you can see the August lows. You can see where it's done. Technicians like Fitzpatrick, all right, it's a good-looking chart. Add that number to the old ceiling of resistance, giving them a measured move price target, which in this case could take the Dow to 2,900. Oh boy, that is an extremely bullish forecast, isn't it? But it makes sense to me now that we've taken the recession fears off the table and the Fed is very much our friend. That's nirvana. There's no reason why it can't go up. If the Dow Jones Industrial Average is ready to roar, which will its components of the components that we should get involved in? Which are the ones that could actually lead the charge? Now, this is where I differ with Fitz, but I'm going to give you what he says. It brings us back to the Dow dividend stocks: Walgreens Boots, Dow Chemical, and Verizon.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.